Good morning, friends. This is the Cryptonian taking a look at Bitcoin, BTC, and the greater market. It is North American East Coast time. It's about 9:30 a.m. on Thursday. So, as you can see here, taking a look at Bitcoin, we did get rejected this morning on a rally to 40,500. If you're paying attention, you did see that we did have a break up to the upside to that level, and then firmly within literally a minute or two, firmly rejected. You can see here that the market pretty much is in a sea of red today, except for a couple outliers: Glimmer, not even a percent, and Jasmine up 6%. So you can see there's a few that are defying Bitcoin, but pretty much right now the entire market is showing that they're following Bitcoin, and Bitcoin is pretty much in the red today. So taking a look at this chart here, we see that Bitcoin is within this purple formation, which is called a pennant. Basically, it is a triangular formation. Now, pennants basically are directional agnostic. What that means is we don't really know which way the price is going to go until it breaks one of these, breaks out above the triangle or breaks below the triangle. And so the barriers or the parameters, the boundaries of the triangle pretty much determine the direction in which it will break. Okay. So there's a few things to notice about this triangular formation, and we can see that we have a lot of volatility, and typically the farther along you get within the nose of the triangle, the more volatile you get. Okay, until it gets to a point where it has to break up, or it has to break down. And so taking a look to the upside, we see that, well, first of all, Bitcoin is 38,900. And to the upside, we have the 200 daily moving average, which is this white line. This is significant. And below, we do have a couple of very significant price points. But before we acknowledge those price points, currently right now we are testing this Fibonacci level right in the middle, 38,500 level. We're currently above that. Not sure if we'll hold that or not. Now, to the downside, the bearish scenario is if we break roughly this $38,000 level, which is the bottom of this triangular formation, then we possibly, the target then would be the bottom of the pennant, which is anywhere from 33,000 to about 34,900, 35,000, about 33 to 35,000 in this area here. However, we do have some things on the chart that complicate that, and that's why we're seeing such fierce bullish behavior in this area. And when we take a look back to the left, and when we take a look at, let me enlarge this for you here. When we take a look at this area, we see two things. There's two levels. Number one, we see a level right here at 36,600, 36,700 is this yellow line here. This is where the volume, most of the volume traded. In all of this run here, when we pivot left and I shrink this down, from this base here all the way up to this top here, the place where the most, what it's called the point of control, the place where the most volume is traded is this peak right here. This instrument is the volume profile over here, and what we see here is that right here at this 36,600 level, 36,700 level, we see the most volume traded in this entire range. So this is huge. This is very, very significant. Um, and so I think this level here, 36,700, is more significant than pretty much anything that we see here. And if we break that, then we could have a major, major capitulation to the downside. That being said, the level of support in the local area, if we break down, would be 32,000, 33,000 in this area. Okay, where we have the bottom of the pennant, that would be the target. But if we break down, we may not stop there. We may not stop there. We would probably come back down to about 28, 29, which is a little bit lower than the triangular bottom, and that would put us squarely at the support area of our previous last year summertime Wyckoff accumulation zone. That would be the bottom support of that area. So once again, to the downside, the important levels to watch is currently where we are now, 38,500. After that, the next level would be 36,700. That is a critical level. If we lose that level, then we could see a lot of pain to the downside. Because what happens, the idea is that there are so many buyers here. This is also called the point of control. Okay, the point of control. The issue is there's so many buyers in this area that once this point is broken, a lot of these buyers, when they start seeing negative from their positions purchased in this area, they will then start selling, or it will trigger some sell orders that they already have on the books, some stop losses. So that's why the bears are trying to fight so hard to push the price down below that area. And you can see that we did wick down below that area, below the 36,700 area briefly, and then we saw a lot of purchasing in that area. We came right back up, and we can see that there's a lot of purchasing because of this big candle, excuse me, not candle, but big volume bar here. So you can see that this had a big volume bar show up, and this area had a large volume bar show up. So roughly between the 32,000, 33,000 area all the way up to the 36,700 area, there's a lot of buying in this area, and or was a lot of buying in this area. So this is a very major support level for the bulls, and it's not going to be hard, it's not going to be easy to break this area, break down below that for the bears. It's going to take a lot of shorting, a lot of selling. It's going to take it's going to take capitulation, major capitulation by the bulls. So that being said, the scenario to the downside would be if we break that 36,700 level, then 32 to 33 down here at the bottom of the triangle would be the next level of critical support. And if that breaks, then you're looking at 29 or 30 down here. And then if that breaks, then you're looking at a Fibonacci extension for the bears, $25,000, $26,000. Okay, so, but then again, I'm just putting this out there so you understand the structure of the chart and you understand the structure of where we are now. This is not going to be easy to break. 36,700 all the way down to about 33 to 36,700 is very, very strong. So if we do break below here, I would not be shorting. I will not be shorting. There will be a lot of people that take a short when we break this $38,000 level. A lot of people are going to short, And what's going to happen is they could be caught by surprise when we get down to this very strong support area, 36,700, and then we see another push to the upside. So that being said, that is the support structure for the bulls here down below this triangular formation. So that's why I would not be shorting a break to the downside from this pennant. Normally people would short. Normally a breakdown of a pennant is a shorting opportunity, but I would not take it. I would not take it. Um, but however, again, that's up to you. I am not a financial advisor, and I'm not giving advice here. I'm just showing you what I see on the chart. Now, that being said, the other scenario, the bullish scenario, that's the bearish breakdown scenario, okay, with bullish support. The opposite scenario is the bullish scenario where the pennant does hold, okay? So we come down and we have a couple days, possibly Friday and the weekend, of maybe grinding out the bottom here around 38,000, 38,500, and then we start to push back up again. And that would be maybe sometime next week, pushing up towards the 43,500 level, 43,800 level, in that area. And if we do break out above 43,100, which is the Fibonacci level here, then we could then see a test of the 200 daily moving average, which is this upper line for 45,000, roughly 45,000. And then if we break that to the upside with some strength, then that's when it's going to get very interesting. That's when we could see a major push to the upside and continuation up to about 51,000, which is our next area of resistance here, where we broke down in the past. So there you have it, friend. Those are the levels to watch, and be very careful. We're seeing a lot of volatility in this market right now, and the reason is because we're above a major area of support for the bulls, and we are showing a lot of weakness as far as price action. And so these are conflicting stories on the charts, where the bulls and the bears are interpreting these events in their favor, and we're seeing a lot of fighting back and forth. Okay, so that being said, on the daily, we are currently in a stochastic impulse to the upside, although um, you know, this could be affected tomorrow when we have another candle. We could see a pull to the downside. And the Fisher wants to cross over. If we go higher from here, Fisher will cross over to a positive reading on the daily, and that's significant because that means that we could be going up if we hold that $38,000 area. The RSI is midline. It's showing indecision, and it's not showing a lot of strength, showing slight weakness at about 45, but not extreme weakness, not extreme strength. We're pretty much in the area of indecision, and we're showing, not weakness, not strength, and so we just need to wait and see what's going to happen. We need to wait and see what the price will tell us, whether we're going to break up to the upside or whether we're going to break down and test that 36,700 level. That's so crucial and so critical for the bulls to defend and hold that. Like I said, because if we break that area, 36,700, we have so much volume that we've had purchased in the past that a lot of those individuals, if they decide to sell, we'll see a crash. We'll see a strong crash to the downside, at least to about 32, 33, and worst case scenario about 26, 27, 25 in that area. So there you have it, friends. I don't want to make this too long. I don't want to make the video too long. I know that I did get a little bit ahead of myself looking into the future quite a bit, But I think it's necessary for everyone to understand where we are in the structure of the price and what the price structure means for us as investors and even for traders. Okay, these uh, these areas are very crucial, very critical to understand as far as as far as support and resistance goes. Okay, that's going to determine a lot of the price action and where the price is going. So right now we're sitting comfortably above 36,700, which is major support for the bulls. It's a point of control. If we lose 36,700, which is a point of control, then the bears will definitely be in control and we could see much more pain to the downside. So, like I said, over here the altcoins are pretty much bleeding. They're all red. And today's Thursday, so tomorrow will either be flat or it will be a bearish day. And we'll just have to wait and see what tomorrow brings. But at this point, I think it's important to be very, very cautious. And I think it's, of course, you always want to use risk management and proper risk reward uh, management and proper stop losses, things like that. Not again, not investment advice. But that being said, friends, let's see what happens at the end of the week and the weekend. We could have a rally over the weekend on light volume, and we could see the price reach back up to test the 40 and possibly $43,000 area over the weekend, because usually there's not as much bearish shorting activities over the weekend as there is during the week. Okay. Thank you, friends. Please give the video a like if you found it informative and educational. Again, not investment advice. Please share it with others so they can learn about crypto. And we will see you in the next video. What do you think? Let me know in the comment section below. Do you think we're going higher? Do you think we're going lower? Let me know what you think. And are there any projects that you're looking at? Are there any projects that you're buying when we have these big red days, deep discount days? Let me know what you think in the section below. See you in the next video. Thanks, friends.